Hi everyone, this is Chongor speaking. Am I live already? Let's get this started. Hi, I see people coming. So we will probably wait a few more seconds. 50 people already joined. Let's give a few more seconds. Amazing, I see a lot of familiar and unfamiliar names. Please, could you just say hi in the chat? If the video is cool, please just let me know. And yeah, please, everyone, shout out which city are you from? $52 people, amazing. We have 250 people signed up, so I guess we will give other 2 minutes and we will start. Thanks, George. Thanks for giving a feedback about the video and audio. So let's kick it off. Hello, guys. Hello, girls. My name is Stronger Bias. I'm with Startup Europe Network. And this is our first online event that we are doing in collaboration with Portfolio VC and Podim. But before I start, let me just give you a quick intro about myself. I myself, a startup community guy. I'm based in Budapest, and I've been working in the past 7-8 years on building startup communities. I did that in various roles. I was running a co-working space. I was working with incubators, accelerators, and the fact that I really like, and the thing that I really like during my work is really hanging around with entrepreneurs and learning from them and just be around ambitious people. And I think with the current crisis and pandemic situation, one of the first things that we can feel on our skin that we lost all these platforms like startup events and coffee meetings, and we believe as startup community builders that we really need to find alternative platforms for entrepreneurs to connect and learn from each other. And we are very, very bullish about online events. I think it has a lot of advantages. You can connect actually people without geographical boundaries. We can get amazing speakers from the US and from more matured hubs without having to travel them. And I think online events have a great potential, and I am very, very grateful for all of you who are joining today. Basically, I'd like to tell a little bit about what's going to happen today. How is the agenda? So this is the arrival session. We're going to start basically in the arrival and the intro section. I will introduce the co-organizer parties of this event, which is, as I said, Startup Europe Network, and we will have Christina Todt, the president and co-founder of Startup Europe Network, to tell you a little bit about what it is. We will have Urban from Podim, and he is going to tell you about Podim. Behind Podim is one of the largest and most well-known regional tech conference connecting investors, startups, and corporate innovators. And actually, the organizers of Podim, Startup Slovenia, is a Slovenian funding member of Startup Europe Network, so we are a partner organization. And we also teamed up with Portfolio VC, which is one of the largest Central Eastern European VC fund based in Budapest, looking for scalable startups looking for seed and Series A investments, and we teamed up with also them. So actually, this is a combination of 3 events, because with Startup Europe Networks, we will launch a regular meetup that will come back every month and every second month. The Podim conference is just around the corner, so this is also a satellite event for the conference, and this is also the pitch night of Portfolio. So in the arrival and intro session, you will meet all these 3 parties and get an introduction. And then we will switch to a keynote talk from Zach Coelius. If you are familiar with his name, he's a 4-time entrepreneur. His last startup was 3D, which was acquired by LinkedIn. And then he went to the other side of the table and became an investor. One of his first investment was an angel syndicate to cruise automation which was acquired for over $1 billion. And since then, he invested in more than dozens of companies such as HelloSign or Baremetrics. So Zach, I asked Zach to give a keynote, and the keynote is going to be about his predictions and his views on what this crisis can potentially mean on the startup scene and how entrepreneurs should react. And then after the keynote talk, we are going to continue with a panel discussion that's going to be moderated by Marvin Liao, who is an investor and tech executive. And the other panelists will be András Molnár, the CEO of Portfolion, Gyula Fehér, partner at Octagon Ventures, István Családi, CEO and founder of Shaper 3D. And after the panel is finished, we will have a Q&A session. So please feel free to use the chat on Hopin to ask questions. I'm going to be choosing the best questions and ask it from the panelists and from Zach. And right after the panel, we will have a session. And I'm going to talk about what a session is in Hopin if you are a first user. But the session is going to be the pitch night where 5 pre-selected startups are going to pitch. And they are going to receive feedback from our selected partners involving Marvin Liao, Aurea Pastor, who is a senior partner at Portfolion, Jimmy Fung, who is the CCO of Sound, which is one of the portfolio companies, and also Christian from Cloud Banzai. So we're gonna have a fun night. Just for you and everybody, the panel and the keynote is going to happen on the stage. But when the pitch night is starting, you will have to click on the session part on the left side of your screen and interface. I think that's all. And now I'd love to introduce and invite on stage my co-organizers, Christina, Urban, and András. Please come on stage.
Hey, everyone.
Hey, Urban.
How are you?
Hello, everyone.
So maybe let's start with Christina. Could you tell the audience what Startup Europe Network is and why we are doing this event?
Thank you, Chongor. So hello, everyone. It's really great to have that many of you here with us this afternoon. And thank you also for our speakers for joining today. We really appreciate your time and your commitment, which is super important for us because being committed and giving back to the community is one of the core value of our network. So the Startup Europe Network was born at the end of 2018 because we've been working with the representatives of the Startup Europe Network for many years now for multiple projects and events and initiatives. And throughout our journey together, we realized that there is a lack of regional collaboration between these actors. And we jointly agreed that it's time to set up a network, which is actually representing all of these organizations that are working on a daily basis with the entrepreneurs and trying to build their startup ecosystem. So this is how the main idea behind Startup Europe Network was born. And in 2019, in November, we established a network with 13 co-organizers and co-founders representing 13 startup ecosystems from Central and Eastern Europe and Western Balkans. So since then, we trying to come up with initiatives and activities like this event today, which will serve you as entrepreneurs in order to be much better connected with us, with each other. And we really hope that in the upcoming series of the event, we can even more helpful for you to get the most recent knowledge from our valued experts. And in the upcoming period, we will also hoping that we'll see you at other events of ours. The other main purpose of the network is basically helping each other, helping the ecosystem builders to thrive. And this is why I'm super proud for this very first event, because it's been co-organized together with our Slovenian founding members, who are the organizers of the Podim conference, and having an amazing organization on board with Portfolion. So this is also a very first good example of how impactful we can be if we join forces. So I really hope that you will enjoy tonight and stay connected and get the best out of this opportunity. So have fun, everyone.
Thank you, Christina. Urban, maybe you could continue to share a little bit for the audience about the Podim conference and its mission to connect stakeholders and startup communities in the region.
Yes, thanks, Chongor, and I'm really, great for this opportunity, and really happy that things are moving in our region, and also super proud on our team on a joint effort that we have pulled together and organizing what we are calling Podim DX, which will be the biggest gathering of startup community in this region. So it will happen so in 10 days from 18 to 20. We will, in 2.5 days of program, we will gather more than 170 startups from the region, investors and corporates, and also what also you and Christina mentioned are the ecosystem builders from this region. It is an extremely important, gathering and opportunity for all of us, especially in the times when the physical borders are closing. The business is still rolling. So, events as today's and as Podim is a super important opportunity. Important puzzle in the ecosystem that has to stay, and that founders, investors, and corporate has to take the opportunity of and participate, since the crisis will go away, and we have to be prepared. It's our responsibility that we push the business forward and connect people, talk, discuss, exchange opinion, and help each other. And these are the core, our values, and also the value proposition of the Podim conference. You'll have, amazing speakers. I'm super proud that also, today's guests are, part of the Podim conference program, so we'll have, all different kind of content for the corporates, from the growth hacking communities, and content for investors. For startups, from experienced founders, food tech, green tech, fintech, so everything will be there. So make sure you don't miss out this really great opportunity to network, to learn, and to make deals.
Thanks so much, Ruban. We will make sure to follow up in an email and send everybody the links for Podim. Make sure to check it out. So last but not least, András, could you please tell a little bit about Portfolio and your purpose for today's pitch night?
Sure, thank you, Csongor. I'm really glad to all my colleagues, and happy to join forces with Podim for tonight. And it's really convincing that nothing can stop us. The weather is beautiful outside. The weekend is almost here in a few hours. And it's a fantastic opportunity to collect so many talents and people and making them to talk to each other. In the last month and a half, I think, just as everybody in here has been talking even more intensively with the investors and the portfolio companies and potential new investments. But what I'm expecting from tonight is really to have other impressions, listen and learn other opinions, and as just previously people said before me, is basically to build a community and learning from each other. Portfolio VC is a Budapest-based venture capital and private equity firm. We are managing various funds, focusing in different life cycles of companies, from early stage until more mature operation. But basically, the way we do that and we work together with founders are pretty much the same. And happy to share portfolio specific things with you and more general things with you tonight.
Thanks so much, Andras. So we are a little bit ahead of time. So in a few minutes, we will start with the keynote talk from Zach. I'd like to ask all the audience to prepare smart and good questions and post it to the chat. So we will be able to use this extra time for that. Going back to our first keynote speaker, Zach, actually we had Zach in Budapest back in November for the Untold Budapest conference that we organized with Startup Europe Networks. And back then, one of the biggest messages that I took away from Zach's talk, that he said that being a founder and being an entrepreneur is the hardest job in the world, because actually as you are getting better at it, it's going to be harder and harder. So your improvement and growth rate correlates with how hard it is. And in the past few weeks, beginning of March, Zach started to publish a few articles about the current situation, and he has one blog post about being a wartime CEO. And I'm pretty sure that some of you have heard this term and this expression, which was probably popularized by Ben Horowitz in one of his blog posts. This economic downturn can mean for an entrepreneur that they really need to change their mindset. And there is a difference between being a peacetime CEO and a wartime CEO. And Zach, when he was building his startup, that was in 2008, and in his blog post, he said that he's got some of his gray hairs from this period of time. So I asked him to tell you guys his predictions and advice. And without further ado, I'd like to introduce Zach on stage.
Hello.
Hey man, how's it going?
Good to see you again.
Good to see you, man.
It's not quite the same as last time.
Yeah, it was more fun, no?
Yeah, much more fun last time. Yeah, that's the understatement of the year. But it's great to meet everybody. Thanks for having me. I feel honored. Very nice. Would you like me to just launch into sort of talking, or are we chatting first?
Yeah, man, the floor is yours.
Awesome. Well, nice to meet everybody. My name is Zach Coleus. I like to say that I'm a washed up entrepreneur. I spent about 20 years starting various companies. The last company I started was an ad tech company. We started that in 2005, right when Silicon Valley was first kind of getting re-going after the dot-com crash. And we built that for about 10 years and sold it in 2015. So I got to experience quite a significant sort of period in Silicon Valley history as an entrepreneur. And then at that point in 2015, while I was sort of wandering around like a lost puppy trying to figure out what I wanted to do with my life, I stumbled into the investing side of the world and started investing in early stage companies, and was stupidly lucky. One of the first companies I invested in was a company called Cruise Automation, which is a self-driving car company. General Motors bought them like 9 months later for $1 billion, and suddenly everyone thought I knew what I was doing, which is not true, but that's okay. And so I've been lucky that for the last 5 years, I've been able to be a full-time investor. Raised a $45 million fund recently, so I've got plenty of capital to burn. And I spend all my days looking for new founders that I want to help out and help in their journey. So the theme for today's talk is sort of kind of built on a couple pieces that I wrote recently that I posted on LinkedIn. One was about the sort of the state of the venture market. Two was about the becoming a wartime CEO, which I'll talk about. And the third piece, which I haven't posted yet, but I'm in the process of writing, is really about thinking about what I think is the biggest opportunity of our lifetimes. I think what we're going through today, as horrible and as terrible and as difficult as it will be, I believe that as entrepreneurs, this is probably the biggest moment we will ever have, and it's huge. And so that's sort of the
Yeah.
welcome back. I am, as I said, in San Francisco, in the middle of homeschooling and enjoying quarantine, and it's quite fun. I hope not really, but I hope you all are equally having a good time. So I'm not actually sure where I got cut off, and I imagine at this point we are in the middle of rescheduling things a little bit. So what I'll do is I'm going to just shorten up the beginning of the conversation a little bit. Sort of the core view that I'm operating off of, and I think it's correct, but everyone's going to have their own view, is that we are probably looking at a very significant recession for the next couple of years. And the virus is not going away until we get to a vaccine, which in a best case scenario could be quite some time. So 6, 12 plus months. And so as entrepreneurs, when we look at what's going on, you have to factor in that if that recession continues in the way that it looks like it will, capital will be in incredibly short supply, with very few exceptions. And your job, the core of being an entrepreneur, is to figure out how to survive a moment like this. So let me give you some examples of sort of what I mean by that. Across the companies that I work with, we have about 50 different companies in the portfolio at this point. The first thing we did was, company by company, or what they did, was really try to figure out what impact this recession and this moment is having on their business. Trying to really drill down on, what's happening with their customers, what's happening with their revenue base, what's happening with their position in the market, and really try to establish very quickly what's happening. And some of the companies that I work with saw a 95% drop in revenue almost overnight, which, as I think you can imagine, is pretty catastrophic. And others of them are growing like crazy. And so the range of possibilities for every business can be quite wide. But until you really drill down and figure out what's going on in your market in the status quo, you can't really figure out what's even next. The next step is the hardest step, which is after you've figured out kind of where things are at, you have to figure out how to extend your runway so that you don't die. My sort of operating assumption is that every company should plan on surviving for at least 12 months without any outside capital, unless they want to basically go out and raise on a significant lower valuation. If you talk to every investor, they're going to tell you something different, and everyone will have a reason for why that's true. But my view and the way we're operationalizing is that there will be a significant shortage of sort of risk capital for the foreseeable future. And so if that's the case, if you have money, you should figure out how to save it in any way, shape, or form. And sometimes that involves simply cutting costs. Sometimes that involves lowering your expected growth rates in terms of your deployment of capital. Sometimes that involves laying off staff. Whatever you have to do, if you don't survive, the whole thing is mute. It's funny, in 2008, I had started, just raised about $1 million, and we were starting to get really good traction against the sort of advertising technology that we were working on in my company. And the business started to grow like this. I mean, we were growing, 50, 100% a month, every month. It was amazing. And so I started going to venture capitalists saying, hey, check out all this growth. Look at how well we're doing. And one after another, there was just like, yeah, well, come back and talk to me in 3 months. Well, why don't you show me that you can get to this? I don't know. It took me 12 months and over 100 VC meetings before we were able to raise that capital. And at the end of that process, we were literally down to our last $5,000 in the bank. We owed Google about $250,000 a week later, and we were dead. And this is while the business was going like this. I mean, the business was growing like you wouldn't believe. but we were totally dead in the water. And one of the VCs I've been talking to is like, hey, can you come out to New York and talk to me about your business? We had $5,000 in the bank. I went to my co-founder and she was like, well, might as well, we're dead anyway. The plane ticket was $2,000. Whatever. I mean, we literally were preparing for bankruptcy at this point. So I hop on the plane and fly to New York. And we have a very expensive lunch, which he gets me to pay for. And then he's like, yeah, can you come to Boston on Monday and talk to my partners? And I was like, oh, all right. And flew up to Boston, get there, have a meeting with him. At the end of the meeting, he's like, hey, we're really interested. Can you just chill out for a minute? And I was like, all right. So I wait. He comes in. He's like, yeah, so we want to give you $4 million, but we want to do it on a $4 million valuation, which for those of you who know venture math, $4 million on a $4 million valuation means he effectively wanted to buy half of the business at that point in time. And it would have been, given that we'd already raised quite a bit of capital, it would have been, it would have really sucked as a founder. I mean, I would have lost 75% of my ownership in that one moment. And, you know, we got lucky that we were able to basically negotiate and kind of bluff our way out of that situation and get to something where we were actually okay. But the scary thing about this sort of recession is that it's going to be really difficult to raise money for quite some time. And then when you can start to raise money, the terms that you'll raise the money at will be potentially so bad that it will really be a really difficult spot. So my recommendation to the founders that I work with is do whatever you can, avoid having to go into the fundraising market for the foreseeable future, because you'll be in a much better position if you can do that. So that's the bad news. And I think a lot of people basically think I'm overly pessimistic when it comes to this. But having been a founder through this experience, I think the best course of action is to be pessimistic in these situations, because if you're optimistic and you're wrong, you die. If you're pessimistic, you survive. You maybe didn't go quite as much, but you survive. And so I think that's generally the course of action. But here's the good news. And this is the reason why I think I'm probably more excited now than I've ever been as an entrepreneur, which is, if you think about the history of the last 100 years, there's been a number of moments. World War II, the Soviet Union and the Cold War between the United States and the Soviet Union, the collapse of the Berlin Wall, 9/11. There's a number of generational moments that have occurred throughout history that have changed everything. In one moment, the day that was before and the day that came after were fundamentally not the same. I think most people would agree that this is one of those moments. I think it's funny when you watch a TV show and you see a crowded restaurant or you see a busy bar, the first thing I think is like, whoa, that looks kind of weird. What we're going through today is going to so fundamentally change the way that humans live, the way that we interact, the way that the world works, that what comes after this will not be the same as what came before. And the differences are for you to build. And I think that's the most exciting part, which is we just took most of the world's population who had been busy in bars and restaurants and offices and subways and who'd been out and about and who'd been living life, you know, close to one another. And we said to them, you are all now going to stay home and you will no longer do any of the things that you used to do. And so now those people they're bored. They need work. They need companionship. They need help with all the various things that basically they can no longer get help with. And they need solutions to these problems. The businesses that used to basically depend on their people coming to work, they need to figure out ways to get those people back into the office safely. The subway cars that used to take people back and forth to work need to figure out how to be able to do that in a way that actually works. If you were to go down and write down all of the opportunities that have emerged in the last 3 months to solve problems for people and businesses and governments, the list would be endless. And what's crazy is that for the vast majority of those problems, there were no businesses ready built already working on those problems. These are green fields. These are opportunities that nobody has easy solutions for. These are truly, these are the best opportunities for an entrepreneur that anyone will really come into in our lifetime. And the businesses that will be built, what I think is the most interesting thing, are not just businesses that go away at the end of COVID, because working virtually, living virtually, interacting virtually, this is the future that we all are going to be living from here forward. All this does is it accelerates the trend lines behind what was already happening. And so this is the opportunity to find these problems, to build the products and solutions to solve these problems that position you for the future of the way that everyone lives. And I know that sounds rather bizarre, where I start this saying, oh my God, the world is ending, and we are no longer in the situation that we were in before. And then I get to this point of, oh my God, these are the biggest opportunities you're ever going to see in your entire lifetime, go get them. But I actually think that that's the truth. The fundamental change that is occurring, while it has terrified the investors, and while it has upended the well-laid plans of many, many, many entrepreneurs, has actually created the opportunity for those of you who see the problems and can figure out how to go solve them to go do amazing things and build amazing businesses. And so in the same moment that I'm terrified about sort of the consequences to my existing portfolio, I'm incredibly excited about the businesses that you all are out building, or that you can build, because I think there's never been a better opportunity in the history of all time, or maybe not all time, but certainly in my lifetime, this is the biggest opportunity ever. And then the Congress, can you give me like a heads up when I have like 5 minutes left or something, so that I don't?
Yeah, I will do.
Okay. How much more do you want me to talk now that we had that little break?
You have still 10 minutes.
Okay, great. Okay, so let's get down to sort of like, those are the two sort of fundamental philosophical beliefs that I hold. One, this is going to be a nasty recession and you need to prepare for hell. Two, it's also the biggest opportunity of our lifetime. But now the question is like, what does that mean? And now let me break this into a couple different parts. As an entrepreneur, the argument that I would make is that we have gone through a fundamental reset of product market fit. And so what that means is that the things that used to work really, really, really well before may not work right now. For instance, Uber had amazing product market fit 2 months ago. Now their cars just sit on the side of the road. The drivers sit there bored, and they barely have anything to do. Whereas Uber Eats has suddenly grown at this massive rate because everybody needs to have their food delivered. And the thing is that for every business today, that same process is occurring. Some of the products that you sell, build, are working on are no longer really relevant. They don't solve the problems of today, and they're the least of the people's concerns. They may have been valuable 2 months ago, but they are no longer valuable today. Whereas some of the problems, products, and solutions that you're working on are incredibly valuable. And so that reset of product market fit, in my opinion, means that you as an entrepreneur need to go back to the drawing board as well. I like to say that product market fit is really the ability for your product, your solution, to be 10 times better than what's out there today, or even there's nothing that does what you do. And the way to think about that is, imagine you cold call a customer, someone you don't know. You call them at 9 o'clock at night on their cell phone while they're putting their kid to bed, and you tell them what you do. You have one sentence because they're immediately going to hang up the phone. You're like, hey, I do X. Most people, if you cold call me at 9 o'clock at night while I'm putting my daughter to bed, I'll hang up as fast as I can. But if you call me and you're like, hey, I have a really good solution for video conferencing that doesn't crash in the middle of what you're doing, and it always works, I'll be like, oh yeah, I want to talk to you tomorrow. The thing is that, like, if you call someone with a solution that's actually to a problem that they have, they'll probably talk to you. And if you think about all the problems that are in the market today, these are problems that people desperately need solved. So imagine every business that's doing work from home right now. Well, I imagine the security infrastructure that they put in place to support their IT operations isn't designed for all of their employees to sit at home. And if you have a solution for that, I imagine they're going to want to talk to you. If you basically have a solution for how do you do dating when you're stuck at home, I imagine people will use that. If you have a solution for good, healthy, fast food that basically can be delivered to your house at a relatively reasonable cost, I imagine people will buy from you. And so right now, the old product market fit is gone, but there's all of these wonderful new product market fits that have emerged. And so as an entrepreneur, you may already have a product, but one thing you can do is go back and say, okay, when we told our customers what we did before, we said this, but what do they need today? What can we sell to them that basically solves the problems that they have that are new? And you can change the way that you position and the way that you address the market that you're going after and the solution that you're providing. Even if the fundamental product doesn't change very much, you may find your customers go from, I'm busy, to, oh my God, I need that, even though simply by changing a few sentences that you have in describing your business. So that's step one. Product market fit is totally reset. You have to go back to the beginning and figure out what it is that's working again if you want to go into the market. Step two is, if you do want to get funded, the core of the fundraising market today is that in order to raise additional capital, you need to demonstrate that you can grow in the new normal. And so what does that mean? You know, some of these businesses have been growing like crazy. They ran into COVID, everyone stopped buying, and suddenly revenue started to decrease dramatically. Okay, well, if that keeps going, the business is going to go out of business. But if you can figure out how to reset your product market fit, if you can reset how you talk to your customers, suddenly you might be in a position where you can start growing again. And if you can start growing in this sort of downturn, the exciting thing is that there probably are not very many competitors who can basically be there with you. There probably are not many people who are there telling the same story, running the same ads, talking to the same customer set, basically in the same markets that you are, because this is all so new. And so those companies that have been able to find growth in this COVID reset are going through incredible opportunities. Some of the businesses that I work with have been growing faster since this happened than they were before, simply because they were able to change their messaging and they were able to figure out how to be relevant and valid in today's status quo. And now they're seeing tremendous growth. And so for those of us who are on the investing side of things, we are in a scenario where most businesses are not growing, but if you are growing, you are suddenly very excited. And so I think if you can discover growth in this sort of period, I think you'll go from having very little opportunity to talking to investors to suddenly having a lot of investors who are willing to talk to you. It's going to certainly be more challenging to raise capital than it would have been a few months ago, but it's definitely the first step.
Zach, it's 4 minutes.
Cool. So I think those are the three major points that I really wanted to get across in this conversation. One, my belief is that this is bad. It's going to get worse. And if you're aspiring to build a company, you should plan on 12 plus months of buckling down, conserving capital, preserving runway, and being in a position where you're not dependent on outside investors or outside support to get anything done. I can't stress this enough. I would do as much reading as you can on how these viruses work, but the core belief is that it's not good and it will be worse. But the greatest companies historically have been built during these recessions. They are These are the moments where most of the other competitors, most of the other businesses that are out there today will go out of business. And if you're able to survive, and if you're able to find a solution to the problems that people have today and grow, you'll have an amazing opportunity, because your competitors will no longer be there. Your customers will be excited to use you because you're actually solving a core problem that they have. And you will be able to acquire amazing, amazing talent, because you'll find that the people that are laid off by your competitors are the people that you can hire as your entrepreneurs. And so some of the best businesses that we know today is, multi-$100-million behemoths were started or run or grew like crazy in recessions like this. And so, as dispiriting as it may be to think that this will be a hard economic time, it will also probably be one of the most consequential periods of our lifetime in terms of building amazing new companies and taking it to the next level. And yeah, I think the trick is go back to the drawing board, focus on what's working today. What was working 3 months ago probably isn't working today. Figure out what's working today, and figure out how to grow, because these problems are real. They're not going away. And if you can basically bring solutions to the market that people are excited about, I think you're going to be able to be okay. So sorry about the technical difficulties. It's amazing to me that I'm sitting in San Francisco talking to people all over the world right now. So we do live in a pretty amazing time. And I think we have a lot of exciting stuff coming. So I look forward to the questions that you guys have, and trying to be as useful as I can be. And yeah, thank you everyone for keeping up the good work. Thanks for putting this together. I appreciate it.
Thank you so much, Zach. Thanks. So we have a couple of questions from the audience. First is from Andre Adam, Rezo. Hi, Rezo. So he's asking, are there any benchmark or KPIs investors more focused on these days besides cash flow? For example, before the pandemic, there were some indicators that investors used to mitigate risk, mostly based on the structure of the market or just simply traction. Does any of these matter now? What metrics will convince you to reach a safe return, and how do you see there will be growth?
Big question.
Longest question.
Yeah. No. So yes, there's a lot of benchmarks and that investors use when they think about businesses. I recommend there's a lot of people who've written a lot of very well thought out pieces on thinking about benchmarks. There's Tomas over at Redpoint has an amazing blog about this. The Saster blog goes in great depth. There's a bunch of great blogs out there about benchmarks. I think at the end of the day, the core benchmarks haven't really changed. What's changed is, are you able to execute at the same pace, and are you seeing the same metrics today that you were seeing 3 months ago? So for instance, if you think about LTV, the LTV that you calculated 3 months ago might have been built off of was built off of a certain expected lifetime of your customers. Well, if a bunch of your customers cancel in the next few months, you're going to find that your LTV functionally changes dramatically. On the other hand, your CAC may have changed dramatically as well, because advertising prices for many startups have gone down quite a bit over the last month or so. And so your LTV may be going down, but your CAC might be as well. And so most investors today haven't really changed the fundamental benchmarks, but we're spending a lot of time digging into what the data is to the companies that we're looking at to understand the impact of COVID on their metrics. And it's unclear still how that's going to play out. So a lot of this is a lot of guessing and estimation at this point. And that when you enter into a point where there's a lot of guessing and estimation, that means that people become much more conservative and they have a much larger margin for error. So if I was looking at a business that had a certain sort of LTV 3 months ago, I suspect I would guess that LTV will be probably at least 10, maybe 20% lower after COVID, depending on what they do, obviously. But like I and most other investors are becoming much more conservative about the belief of sort of these forward-looking metrics when we think about them.
Next question is from Mircea, our Romanian funding partner, Spheric, and he's asking, in your opinion, which domains, industries do you think will have good growth despite the current conditions?
Yeah, so there's the obvious ones. So work from home, home education. You can probably hear my daughter is coming in occasionally. She has things to say to me. If you can provide virtual solutions, I think obviously you probably are set up to see tremendous growth. I think security is going through a very significant phase change where security based on on-prem IT is probably having to adjust dramatically to a work from home scenario that's non-trivial. Obviously, if you're doing certain things in healthcare or in PPE or in various types of testing, that would be really good. But yeah, I think for most of the categories that we look at on a traditional basis, there's a lot of question marks. And so I think everyone is trying to figure that out. I don't have good answers. I'm also trying to figure it out.
Cool. Next question is from Lauren from EIT Digital, and he's asking who are better off in this situation, those serial entrepreneurs who already been through a crisis, or those that might be different, or those young entrepreneurs who are very easily to adjust to this kind of lean way of easily surviving with a low burn rate and do the kind of the startup pay.
Yeah, that's a good question. Seeing as I'm no longer a young entrepreneur and I am an experienced entrepreneur, my bias would say the experience, but I think that young entrepreneurs who adapt well to this and recognize that it's time to go to ramen noodles and it's time to cut and survive are well positioned, because not only are they good at cutting their costs, they're good at changing their mindsets. Hold on one second. What's that? I'll help you in a second, okay? And I think that's the biggest thing. I think that's the most important thing, which is that mindset changes right now are paramount. Because if you think the world hasn't changed, and most old people really struggle to change their mindset, well, you're gonna really be in a tough spot in this new world that we live in. Whereas young people, I think, are much better at that. So I look at this in a lot of ways like a generational moment. I say this is the beginning of Gen V, Generation Virtual, because a few months ago I'd be like, hey, go outside and play to my daughter. I can't do that anymore. She's firing up Zooms with her friends and having play dates without even thinking about it. That whole thing is very weird. And the fundamental changes that happen to young minds when they go through something like this are pretty profound. So, I guess if I had to choose, I guess I'd pick the young entrepreneur, but we're going to find out.
Thanks. So next question from Francisco. He's asking what steps or safety checks would you add to the current processes that you wouldn't have done before? For example, he's having a product launch in 2 weeks. Customers in beta seem to believe and think in the same product. They think about the same about the product. Should we change something in our strategy or keep it as usual?
So obviously, I don't know the specifics about the product or the business, but I believe that it really comes down to how much do your customers love what you do. So if he has a product in beta, I think he's probably got a pretty good sense of what his customers think and what they've thought before the reset and what they think now. And to the extent that they are enthusiastic and he's solving a problem for them and they're sharing the product with their friends, I think he's probably in I think he probably is as close as he can be to understanding what his customers think. And if his customers like his product, I don't see any reason not to take it out into the market. I don't think this isn't an excuse to like turtle up and stop trying to move forward. I think the key here is entrepreneurs need to figure out how to conserve the resources that are scarce, which is capital, and take advantage of this opportunity and figure out how to grow and how to be aggressive against when they do find product market fit. And so if they found product market fit, then I think they should go for it.
So the next question is from Jimmy Fong, who you will be later seeing at the pitch night as part of the jury. And he's asking, burn in Central Eastern Europe is much lower, in my opinion. Because of OPEX geo arbitrage, if you are experiencing contrarian top-line growth because of COVID, how do you approach the survival thesis if that is of less concern? Do you still build in a certain runway to cope with uncertainty?
I mean, obviously the difficulty here is that each piece of advice is different company by company, and the specifics are, they're important to these sorts of questions. I don't know how to answer this question not knowing the specifics, I guess is what I'm getting to. I'm operationalizing under the assumption that things are going to get worse, and you need to whatever the specifics of your business are, you need to prepare to be able to navigate that. Yeah, that was a terrible answer, but it's hard to know how to answer that without the specifics.
Okay, next question is from Michael. Do you think US investors are going to be more or less likely to invest abroad in the next few years?
To invest in what?
Yeah, internationally, invest abroad.
Oh, yeah. That's a good question. You know, I don't know. I think there's a number of different sort of potential ways that this plays out. One way is US investors, Silicon Valley investors in particular, slow down their investing pace. And because they're not able to basically meet in person for the foreseeable future, they mostly target their investments towards those businesses who are run by entrepreneurs who they already know. So they're like, I know this person, I've met this person, I trust this person. I don't have to basically invest in someone just based on a Zoom call. But the other way to look at it is, I believe that this creates opportunities for agile entrepreneurs who are comfortable working virtually to go after new market opportunities, which means I think that entrepreneurs who are coming from sort of second markets, non-Silicon Valley markets, actually this is a huge opportunity because you can be agile and you can go after basically the new customer needs that are out there, and you have low burn and you know how to work virtually and across these solutions. And so if you can get to growth, I think you're going to see that, you know, investors are going to be excited. So if you're growing quickly, call me. I mean, call Marvin, call any of us, because we want to talk to you. And so I don't care where you're from. Like you could be anywhere in the world as long as you're growing quickly. I'm excited about it. So just grow and you'll be fine.
Cool. And last question from Jesse from Phonin, who you actually met on the Untold stage. He was one of the pitching startup. So he's asking, why do you have so much certainty that the world has changed forever? Couldn't it be that after 1-2 years, when the vaccine is made, things can normalize, as humans are social beings by nature, and perhaps our ability to create vaccine has leveled up, and these kind of problems become less common than ever? Could pivoting now your startup feel like a mistake in 6-12 months?
Yeah. So I think if you asked every person in this room, they would tell you something different. I think we all have different views. My view is informed by how I'm evaluating the way that this is going to play out, which is by no means is it perfectly correct. It's how I've kind of done the math. But I think no one would disagree that the virtual experience that we're living in, is part of a trend that in 10 or 20 years will be orders of magnitude more sophisticated, more powerful, and more effective. In 10 or 20 years, we're going to be living in a virtual world. We'll look into our implants in our eyes, or we'll put on our headset, or we'll wear our glasses, and we will be living together in a virtual world that will seem like it's reality. And I personally believe that that's almost guaranteed. And so what's happened by taking billions of people and forcing them to leave their real existence, their real social experience, and put them into this, is that the resources that the companies have to support this and to invest in this have just increased exponentially. So Zoom went from 10 million people using the product to 300 million people using the product. That growth of incoming users is also a growth of cash that Zoom is going to be able to use to improve their product. It's also 300 million new minds that are thinking about this problem of how to make this better, how to innovate on this, how to really inform a virtual community. And I think that is going to move the state of the art and the cultural sort of experience of virtual living forward dramatically over the next couple of years. So yeah, I think if and when we get a vaccine, knock on wood, we all hope we do quickly, but who knows? I think you'll see some return to a normal sort of real living, but I think that this will have so dramatically changed the underlying infrastructure of our lives that we will be much, much further along in that trend line, like, than we would be if we basically had not gone through this. And I think a number of things may be so damaged that they will come back at a fraction of the relative importance they were at before.
Thanks a lot, Zach. And we are running out of the Q&A time. And with that note that you just said that for this answer, probably every person would have different answers, I'd like to introduce the other panelists. So we are arriving to the next agenda point, and we organized this panel to follow up the conversation about this topic. And we would like to put it into not just to a global, but also to regional perspective. So I'd like to start introducing our guest, starting with Marvin Liao, who is an investor, early stage startup investor and tech executive. Previously, he was running the accelerator program of 500 startups in San Francisco, and he invested and worked with more than 500 startups. And he's going to moderate the panel. Marvin is a real world traveler, so he has really good insights, not just from the US and global startup ecosystem, but also from the region. Zach is going to stay on stage, and Dula Faher is joining him, who is the partner of Octagon Ventures, and previously he was the co-founder of Ustream, which was acquired by IBM and was one of the most successful Hungarian startup story. And István Csanádi is joining him as well, who is the founder and CEO of Shaper 3D, which is currently one of the hottest startup in Hungary. They raised a Series A led by Crowndum and Point9 just pre-COVID, and they are growing insanely, being multiple times featured by Apple. And András Molnár, a portfolio VC, is also joining, who you already met in the beginning of this event. So without further ado, I'd like to give the stage to you, Marvin.
Right. Hi, everyone. Good afternoon, good evening, good morning, wherever you all are. I'm excited to be moderating this esteemed panel. And so I think, thank you, Zach, for the great talk. I agree with almost most of the points. We think alike. One of the things I want to do was sort of like kind of get to the sort of ground truth, right? So most of my panels tend to be pretty fast. Just a question for you, Csongor. How much time do I have?
You have 35 minutes.
35 minutes. And you're going to let me know 5 minutes sort of before I end, right?
Yes, and I'm going to come back and ask the audience questions again.
Perfect. All right, so what I'm going to do is introductions are done. What I'm going to do is I want to kind of set the stage. I want this panel to be insightful. I want this panel to be sort of also helpful for all the attendees. And so what I'd like to do also to make sure there's hopefully some actionables for them. And so Zach, I think you gave us your views in general. So I think this is the first sort of like area. I want to cover on building companies in tough times. So Julia, Zach, you guys were around in 2007, 2008, 2009. Is that right? The timing of when you guys were around. Can you give us like one or two sort of like learnings that you actually had, or a story that you actually had of sort of like the biggest challenge that you had during that time and what you did to sort of get through that? And maybe we'll throw it to Julia first, and then and Zach maybe after you. After we'll have you after. Julia, you there?
Yeah. Sure. Yeah, I was fortunate enough to raise a round just a couple months before the whole Lehman Brothers thing went down in flames. And the first thing I learned almost immediately is that even though we venture capitalists think that we are better than the average Main Street investor, we're not. You know, venture capital is a cyclical market, just like real estate or the stock market. And you can see these cycles where, you know, after a sobering event, be it the dot-com bubble crash or the 2008 recession, or probably COVID now, you know, the market sobers up, investors get more cautious, there's more prudence in their decisions. And then at the end of the cycle, you got rework and bird. Sorry. And you know, when we raised money in our discussions with almost every VC, including the one who ended up funding us, it was all about users. What's your user growth? Yeah, I care about revenue, but it's not your primary metric. Okay, user growth. That was the big thing of the day. Everybody was referring to how MySpace was valued at $35 per user, which was insane. But so that, putting that aside, the moment when things went down and then Sequoia sent out that, you know, buy now infamous deck with the tombstone with good times on the front, immediately every VC in town became like, all right, I'm gonna need your plan to get to, you know, positive cash flow in 3 months or something like that. And the tone of the whole conversation changed almost overnight. And I think that applied to those seeking funding as well. Suddenly, the actual good old business metrics became much more important once again. The actual health of the business and the underlying metrics. You know, how much money are you bringing in? How much money does it cost to bring that money in? And if you really wanted to, could you get to a positive cash flow, even if it's painful? Those things became much more important overnight. And I think short term, what we are going to see is that these businesses which are doing just that, you know, using $1 to create more than $1, they're going to be in very high demand again. And your moonshot project, which spends $20 to create $1, but if this and this and this and that happen and all the stars align, you may become the next moonshot at the end of the day. I think those businesses will have a very hard time raising hundreds of millions of dollars anytime soon.
So basically what you're saying is back to basics, right? Like the basics of the business, you know, make sure that sort of everything that you're doing, there's sort of like positive unit economics, and obviously manage sort of like, you know, sort of cash flow and cost structure, which are what you would think that company would be doing.
Yeah, thank you for summarizing my somewhat bloated rant, but yeah, that's the gist of it. I mean, it's common sense in a way, and honestly, that's in your interest as well as an entrepreneur, because if you got a solid underlying business, then you are not at the mercy of investors who are also human beings, even if we don't always look like it. And they, they are holed up at home, uncertain about the world. So I think everyone's instinct, based on our ancestry from ancient times, in such cases is to preserve yourself, preserve your resources, and wait until the danger is gone.
Yeah. So basically, yeah. So
what get eaten up by the tigers? So we fear.
Yeah. I think that's the idea of just sort of like fear versus greed, right? So if you think about sort of during the boom times, particularly like 2018, 2019, even beginning of 2020, I think investors are driven a lot more by greed than fear, right? Because you're like, there's lots of money, there's lots of downstream capital, but actually, like now, sort of like post March, it's like, holy crap, like most of my portfolio is probably going to die. I'm going to look like crap in front of my LPs. How do I, and how do I survive personally, right? Like this is actually existential threat in general. Does that sort of sum it up?
Yes, and also there is I think also very rational thought in most investors' mind, which is, I can use the analogy from buying a home. Would you buy a home right now, or would you wait to see if it's gonna be much cheaper 2 months from now?
Yep.
I think you would wait.
Yep.
And that's what a lot of investors are doing, which may sound somewhat cruel, but honestly, in a market when you're the party with the funds, it's a much easier situation than being the party looking for funds.
Sure.
So I think most investors are anticipating some sort of deflation in most of the sectors. And, a lot of it is not wanting to be the idiot who did the last investment at 15x multiple in XYZ sector just before the average dropped to 7x or 5x. So I think there's a lot of wait and see. People are also looking at each other, who are doing deals, what type of deals are they doing. And I think a lot of the FOMO that was definitely here in the recent years is temporarily gone.
It's gone. It's gone. All right. Thank you, Julia. Zach, would love to hear your thoughts on this, a story sort of from 2008, 2009, or even what you're telling your portfolio companies right now and what you're finding. That will be helpful for everybody here.
Yeah, I really agreed with what was just said. I found myself nodding constantly there. One of the things that one of the experiences I had that I was very surprised by was actually getting paid by people who owed us money after Lehman crashed. Suddenly became a very different experience. So previous to Lehman, we got paid on time. We sent our invoices, people sent us a check, everything was fine. And almost immediately, as soon as Lehman crashed, suddenly not only did those checks not come in, but the people on the other end of the line, they really showed who they were in a way that I was quite surprised with. In that people that I thought were stand-up, honest people wouldn't lie about things. They would tell me, hey, guess what? I'm not going to pay you. Bummer. What are you going to do? Sue me? Like the counterparty risk amongst our customers went up significantly after Lehman crashed in a way that really shocked and surprised me. And I think that's one of the things about having lived through a recession that's important, is that like there's going to be a lot of changes that will seem, if you've never gone through it before, will seem kind of will be weird. You will be shocked. And so, for instance, the first time, basically, like I had someone refuse to pay, even though we had it in writing that they owed us money, and then I had to go to court to get them to pay us, was quite a jarring experience. And so, yeah, I think the sort of like Ben Horowitz's being a wartime CEO idea is really the right way to think about it, which is that like the things that used to be normal are no longer normal, and you need to prepare for an entirely new context as we navigate, the coming months. Because the thing is like, even if we get a vaccine tomorrow, the damage has already been done. So we're going to be living through a recession for quite some time. And I think as an entrepreneur, that was a lesson that was surprising to me, but one I'll never forget.
Yeah, I think that's a great point, right? Because I think a lot of people just give sort of like more of the sort of macro situation, like I said, even if we get a vaccine tomorrow, not going to happen, and we hope that it happens. But economies stop like a car, but they start like a train, right? So it's going to take a while for things to sort of come back. And I had the misfortune of fortune of actually being through 2001, 2002. That was way worse than 2008, 2009. Even 2000, 2009, I remember, talking to clients and where before you'd have 30-day payment schedule, like, hey, you're getting it in 90 days. And what are you going to do about it, right? Nothing, right? Like, and so, you're like, crap. And so the advice that I've been, so I have over 400 companies in my portfolio. So I've spent the last like 8-9 weeks spending time with a lot of the portfolio companies and founders. And it's interesting. So just to also give some more context is that I think it's probably 10 to 20% are like in really good shape. They raised just in like January, February. That's an amazing situation to be in. Then there's probably about 50 to 60% that are like, probably in between like, I'm going to say 9 to sort of like 12 months of cash. You can probably go and extend that, right? And so those are kind of like, okay, let's go and take a look at your situation, right? Your industry. Like if you're in the focusing on the travel industry, you're probably screwed, right? All your customers are toast. Or you're focusing on the SMB restaurant industry, so going through like all these scenarios, and there's just like 10-20% like just done, right? Like just like I don't think they're going to recover. And so I think this is one of the things I tell all startup founders, and I found stuff like nodding, so like in your entire conversation and sort of presentation is that I think like hope is not a strategy, like hoping that's going to be a V-shaped recovery. And so the reality is that you need to prepare for the worst. And so my advice for most entrepreneurs right now, go back to sort of like your, sort of where you're at right now, your forecast for 2020, reforecast that down to what happens if you hit 10% of your forecast, right? Like if that's what the business is going to be like. Because even though your churn is not high right now, for a lot of folks, your renewals are coming up in Q3, Q4, especially for big companies. They're going to be looking at sort of like, going and doing this thing called zero-based budgeting. So like, how do you get to zero every single month and starting from scratch? And so understand that this is actually probably, for a lot of big companies, a lot of your customers, it actually hasn't happened yet. This is actually going to start happening very, 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 very soon. And when that happens, you're going to see which software is actually needed. So for example, Salesforce is probably going to be needed. They're safe, right? Oracle is probably safe. I think there's a lot of software that's probably not like that. And so you need to be very, very honest with yourself is your software really a must-have, or are you just being sort of like overly optimistic? Would you agree?
I would, yeah, absolutely. Yeah. I mean, I think people who have not experienced what it's like to be on the receiving end of corporate cost cutting will be surprised at how irrational and stupid it is. It's funny, your champion will be like, oh my God, they're going to fire me and my entire team and cut our software and we're critical and they're going to this whole department's going to go out of business if they do that, but they're going to do it anyway. They're so stupid. Yeah. And it'll be like, I don't get it. And then they'll do it. We had an experience with Priceline where, just to tell you how stupid this was, we were driving the highest ROI of any of their partners for their advertising business, and they shut us off. And this is how crazy it was. The woman who shut us off said, yeah, we're shutting you off because if our superiors find out how well you're doing, they're going to insist that all the rest of our partners do as well as you're doing. And we can't do that. So then they'll probably fire us. So instead, we're just going to shut you off. It was like the weirdest, most bizarre experience of my life. We were their best performer, and they shut us off because, yeah. But it's weird. Things become it's a bizarre world when you go through a crazy recession.
Yeah, because I think everyone's so fear-driven, right? Like just like nobody's rational in an environment like that, like this, and especially this one where at least before you're sort of worried about your financial sort of like health. Here you're worried about your health, and your financial health, right? And then you have all these like other weird things, like most people working from home with your families, and it's stressful. It's just a really, really stressful time. So people do wacky things during times like this. And which maybe that's a good transition into sort of like the next stage, which is sort of fundraising during this time, right? Which my general advice is like, you know, unless like you're in like the driving the working from home, or your telehealth or something, or your sort of like food delivery, like I think most companies probably should not be fundraising. But that's just me. Julia, what are your thoughts on fundraising? So I'm going to, these folks, I'm going to sort of tee up. Andres, Zach, Julia, love your thoughts on like advice for fundraising. My advice is not to do it, but that's another story. You know, but like what are the things, like specific tips for folks on this call of just like, if you are going to fundraise, you know, I think what are the criteria that you need to sort of like think about? What's sort of the story piece that you need to think about? What are the questions that you need to answer to fundraise properly, and some considerations? Julia, tee up.
Well, like you said, if you are one of those lucky randomly selected 15-20% of startups who are in the right sectors and are being just hit by random growth right now, then use this opportunity for sure. If you're not, and I think it's more relevant now, if you're not, then know this. A lot of VCs are sitting at home at Zoom all day, so they don't spend much time traveling and hanging out at conferences. So they have a lot of time and they are bored. And they would rather listen to your pitch than have to deal with their kids. So they will listen to you. But don't get your hopes very high. So regard this as an opportunity to get your, not even your foot, but maybe your toe in the door. And, you know, building a successful funding round takes about 4 to 6 months anyways, even in peace times. So you can use this time to get yourself known, get yourself on their radar. And once things ease up a little bit, then you can build on this initial step. So then definitely try and get that meeting if you can. Just don't try and push very hard for a close. The other thing you should know is you need to live to fight another day, because this will get better. With the US interest rate at 0, with the EU interest rate in negative, money will be looking for opportunities to make more money. And a lot of it will happen in private equity, in VC. So I think just like in 2008 and 2009, this will be temporary for the funding squeeze, but it may take 12 to 18 months. So you need to live to fight another day.
And I would say, I think also this sort of like I think it's going to be longer. My guess is probably 24 months at least, but it definitely will come back, right? There is a light at the end of the tunnel. So you know, I think the net is you kind of just got to survive, that, you know, for in my view. And I think the other thing to sort of keep in mind is that I think funding cycles will take longer, because like I think one note that I tell most founders is that, remember, most VC funds are not, and most VCs are not structured or well sort of like positioned for doing deals on Zoom. I don't care what people think. Most VCs are not set up that way internally, and it's just going to take longer. So what could take 3 months, 6 months, whatever, you should add on another 3 months of that process. But I do think if you are looking to fundraise eventually, this is a great time to start building relationships, and just be thoughtful about that. Andres, is Andres on the phone?
Yeah, I'm here. Hi.
Yeah, yeah. Hey, Andres, would love to sort of get your thoughts on sort of like fundraising and sort of what you're seeing, what you're telling your portfolio companies, and at least your perspective.
Yeah, I think, as you know, I'm a member of a team who was working hard together with Podim, organizing a elevator pitch event after this this conversation between us. So I would feel kind of stupid sitting here and agreeing with you that not to raise funds. Obviously, this is why we're doing. We have a pipeline and we want to extend it, and we want to continue the smart conversations that we have with entrepreneurs around us. I agree also with Jula that I'm sitting in front of this computer the whole day. I'm disagreeing with Jula that it's boring, or should be boring without it. But I think we are talking very little about the fact that compared to 2008, we know substantially less what's going on around us. I think in 2008, everybody had a common understanding what's going around economically around us, and today we have very little knowledge, evidence-based knowledge, what's going around and how this whole thing is going to continue. I'm pretty much convinced that a healthy startup is just operating in the last 2 months as it was operating before, fighting for customers, pushing R&D and product development as much as possible, and trying to survive the situation. Surviving is pretty much needs the same effort than it used to before the pandemic situation. And just similar to a healthy startup, I think a healthy investor is up and running as well. And I'm sure that everybody in this panel is doing something similar as he was doing it before. Things that might be different. I also expecting that closing a deal takes long. It's a longer period. It's part of the due diligence, the formal due diligence, and the personal due diligence is more difficult in to doing it not in person. But deals can be done. I think also the whole situation has an obvious effect on valuations, but it would be a stupid investor strategy to take an extra advantage on this situation, and obviously a smart investor doesn't want to ruin a healthy cap table. But my ultimate answer is that life is going to go on, and obviously I love the space that we are as investors in it, and a tech startup is in it. We're gonna come out stronger out of this than large corporates. That's pretty much obvious.
Yeah, I agree with that point. And one quick question, sorry, before I close this off with you. Are you still doing deals at this moment?
Yeah.
Okay. What was your last deal that you did? When was the last deal that you did?
Last deal we closed was February.
Okay, so you haven't done any deals since February?
No.
Okay, all right.
But my estimation that first half of the year we'll do transactions.
Okay, all right, good to know. So anyone who's looking to raise some money, go talk to Andres. All right, Zach, I'm going to throw this over to you, man. Your thoughts on fundraising during this time.
Yeah, I think I already did a pretty good job, kind of like nailing what I think is important. But yeah, I think to go back to what was said earlier, I think now's a good time to build relationships. A lot of VCs have a lot more time. We're not doing coffees with our VC buddies. We're not flying around the world. We're not going shopping for vests. We're not doing all the stupid VC things we do. We're stuck at home. And, I'm always interested when a startup, wants to share their story. I'm interested to learn more. So I think now is a good time to reach out to VCs and start building relationships. Yeah, it's going to take a lot longer to close actual capital. It may take a lot longer, but I think if there's ever a time to build relationships, now it's a good one. So I think go for it.
Yeah, and I would give sort of like one additional advice as well too. I think that whatever industry that you're in, I think when you're pitching, you should never pitch, but when you're talking about your business, for any founders on this call, and this advice I give my portfolio as well too, is that you need to talk about how you are going to build a big, massive business in this new world, in the post-COVID world, right? Your story has to change dramatically. So for example, if you're in enterprise software, like, sorry, innovation's out, right? Like innovation groups are out. You're repositioning your product, hopefully for like cost savings and management. And so I think like you have to rethink sort of like how you talk about your business and talk about sort of like how COVID is going to, how you are going to thrive in the post-COVID world, which is going to be very hard, for example, if you're in the travel industry, but like, the travel industry is going to come back. So like, what is your vision and view of sort of what the post-COVID world looks like, right? And it's a vision that could change as more data comes out. But I think for investors, this is one of the reasons, at least for me, it's been so hard to sort of invest these last sort of, and I'm probably not going to invest, frankly, for the next couple months, is because there's so many this is a great reset. There's so many new consumer behavior changes, and it's not very clear what that looks like. So it's a lot of these big massive shifts are changing. You're going to see a lot of new behavior from corporates and new buying behavior. And so until you have a good sense of that, the way I'm going to develop that is actually, most of it is actually going to be knowledge from founders. And so we want to understand how you're looking at the future, right? Like that's how I get educated, right? I steal these great ideas from smart founders as they figure out their future. And so this is something that I think all of the founders need to be thinking about in your story as you go out to raise money. What does the post-COVID world look like, and why and how are you going to thrive, right? What is your vision for the future? And I hope my investor friends on this call actually would agree with that one. But anyways, that's just some general thoughts. So we have, I think we have Istvan on the call. Istvan, you are the hottest startup in the CE region right now, and we're very, we're smart or lucky to sort of like be able to raise just right before, right? And I think I joke about sort of like sometimes the secret is sort of like timing and luck. Just like sometimes it's going to be like even great companies will die during this time because they don't have capital. And so, how are you thinking about this sort of like? You were brilliant enough and lucky enough at the same time to sort of like raise before. How has this crisis actually changed how you are approaching the rest of this year? And so just how you're thinking about the rest of the year and growing and just how you think about stuff.
Yeah, so we are quite fortunate to be on the better side of things. And actually this pandemic helped us a lot with growing even faster. So in the first 3 years of the business, we tripled our MRR every single year, and I think now we are on track to do a 3.5 or even 4x by the end of the year, partially because of the pandemic. So just some context, we are building a professional computer-aided design application for the iPad, and I think this basically explains what's going on here. People start working remotely more and more. CAD as an industry is just stuck in the 1990s. Working from home with your CAD system, it's not an ideal solution, to be honest. So they just start to look for new and better solutions. They discover new things. Obviously, the new release of the new iPad and the new iPad OS helps a lot as well. But we see this very often that designers and engineers downloading the app because they want to discover something new, want to learn something new, and they want to work remotely, and they are looking for solutions for that. So that's definitely a huge trend, and I think that this is not really going to go back ever again. That's my bet on the future.
So as you're sort of operating, like you have money in the bank right now. Are you changing anything that you're doing right now, or are you hiring more people? Sort of like what's happening in your business, and how are you thinking about this?
So in the first few weeks, we were a bit worried, obviously. We are not crazy, so we wanted to just see what's going to happen. And the first 2 or 3 weeks were tough. It was really interesting to see that in every region where the pandemic started, in the first 2 weeks, our numbers dropped like 40%, 50%. And then after 2 or 3 weeks, they started to go up like crazy. And so basically, because of this, we're not stopping at all. We are hiring even more aggressively. We hired more recruiters actually to hire more aggressively. We are scaling up our engineering and marketing operations. We see this as a huge opportunity.
And what advice would you give sort of like a new founder these days?
Oh God. So change always creates opportunities, right? As I think that Zach was spot on with this, and so here is a personal story from Shaper. Shaper was founded on a hypothesis that there will be a platform shift happening over the next 5 years or next 5 to 10 years, and we are going to transition from desktop computers to PC substitute tablets like the iPad Pro or like the Microsoft Surface. These devices will require a completely different UX UI paradigm, and we double down on this. And we rebuilt CAD basically for these devices. And this was a huge bet on our side. We predicted this massive change. We saw it as a very similar trend to what happened in the 1990s when we were transitioning from mainframes to desktop computers. And basically, we built the company based on this thesis, this hypothesis. And I think that now, at this point of time, you can actually find a lot of things that are changing, obviously. And you can, if you think a bit and you observe a bit what's going on in the world, I think that you will find a lot of things that are going to change in the next 5 years, and building a company to serve those new needs is the best thing that you can do right now. So I'm pretty confident that this is one of the greatest times to start a company, because there are so many new opportunities there. It's just not entirely obvious, of course, yet that what are those opportunities, but some people just have amazing gut. They have amazing sense to predict the future, and those founders are going to succeed.
Yeah, I agree. I think it's interesting if you look at 2008, 2009, 2010, as analogies, like they were incredible. Like from a VC perspective, they were incredible vintages of investments. Like there were so many great funds and so many good investments that actually came out during that time. And same thing if you look at like 2004, 2005, 2000, like I think it's probably more like 2003, 2004. Actually turned out to be like pretty good vintages as well too. And that makes sense, right? Because I think that a lot of just people who come through recessions are just tougher. And I think that's I think people are just going to get tougher. You have no choice, right, in this environment.
Exactly. So I think that one of the main things that we will have to learn as founders is to how to operate with like in a super cash efficient way. I think that's key. We are as a company, we are pretty good at that. So we went really far from very little, and that's somehow the DNA of our company. But I think in the future, this is going to be even more important. So it's not the venture capital market is obviously going to tremendously change, and cash efficiency is again going to be super important.
Yeah, that's and which I wish it was before, right? Because I think just walking around San Francisco in like 2018, 19, even early 2020 is just like the stupidity, right? So free lunches are gone, like literally, like free lunches are gone from a lot of these offices, unfortunately. So that's sort of the world that we're in. So what I'm going to do is I'm going to go through each of them. Thank you so much for the sort of like your views and thoughts. What I'm going to do is I'm going to go to some of the sort of one ask for each of you. You've already given your piece of advice. I'm going to go to the other sort of panelists, and we have I think 5 minutes left before we go into questions. One sort of actionable piece of advice on how to get through the crisis over the rest of this year and next year, and just hopefully that any founders on this call, on this video call, can actually take away. Maybe I'll just start cold calling. Thank you very much, Istvan.
So I think there's the most important thing is to just be super conscious about everything that you are doing, and rely on data as much as it is possible, and really consider that you're going to do 3 times at least, and don't make decisions based on just on gut feelings or hope. So wishful thinking is the worst thing that you can do today.
All right. Thank you very much. I appreciate that. All right. I would love your thoughts on some actionable advice for founders on this call they can take away.
You just muted when you said who you wanted to answer next.
Okay, Andres. Andres would love your thoughts.
Right. I was just listen, guys. Nobody can predict, I think, the future of Shapers as a company, but the way Istvan is talking and this attitude that you represent, obviously, you Istvan, and the guys around you will be the heroes of these days. It's exactly what we have to do is both entrepreneurs and investors. That's exactly that you as an attitude has to follow. Maybe you'll fail, maybe you'll win, but the attitude is obvious. As Marvin was saying, so many things are changing around you, but who is taking advantage of the change if not an early stage investor and a founder? I think this is something we ultimately can agree with.
Thank you very much. Julia, you still there?
Advice to founders, sure.
Yeah.
Number one, don't die. If you want to have a company 3 years from now, take a look at your runway. If it's less than 12 to 18 months, you probably need to make it at least 18 months. It may be more or less painful depending on, when you raised, what your burn is, and so forth. So have a hard look at it. Also have a hard look at your customers and try to gauge how their own businesses are doing. If they are doing great, then that's good news for you. If they are doing neutral, that's, in this situation, it's also great news. If they are not doing great, then you should prepare, because just like you would, they will be taking a look at their expenses and they will try to cut before they get to their own headcount, probably. And the first thing everyone tries to cut in such situations are vendors. So be smart. Think about how you can make yourself essential. And even if you can't, preemptively think up ways, deals, extensions for, reduced monthly cost. It costs much less to keep an existing customer than attracting a new one, especially in this situation. So don't die, and save as many of your customers as you can, even if you need to make compromises. And, in parallel with that, try and think of smart, partial, or even full pivots that could turn you into a net beneficiary of this situation, which is not easy. But again, in order not to die, you kind of need to do that as well. Thanks.
All right, great advice. That's awesome. That's awesome advice. All right, Zach, I guess we'll close off sort of a good piece of advice from you. Well, you've given us lots of great insights already, but anything that comes to mind.
You're muted.
Still, okay.
Sorry, I was on mute.
Yeah.
I think one of the keys for understanding a major context shift like this is to think about what's scarce and what's plentiful in a moment like this. A few months ago, capital was relatively plentiful, talent was super scarce, time was scarce, competition was intense. I think in the next 12 months, we're going to find a pretty significant inversion in that, where capital will be very, very scarce. Talent, because there's thousands and thousands of people being laid off as we speak from jobs in tech. Talent will become much less scarce. Your customers are going to have more time for you if you have a good solution to their problems. You're not going to feel as stressed by your competition, who are being irrational and who are forcing you to move faster, because they also will be ratcheting back. So you will hopefully have more time. You can be more patient. And I think if you think about that and you operationalize accordingly, you conserve your cash and you make investments of time that previously maybe wouldn't have been possible, I think there are going to be a lot of opportunities that will emerge in the coming days. So I think this is probably the most exciting time to be alive we've ever been through. It's going to be really, really terrible in many ways, but I think it will also be exciting because everything is being thrown up in the air, and the question is who's smart to grab the opportunities.
Yep. Yeah, it's to quote Littlefinger from Game of Thrones, right? It's like chaos is a ladder, right? So chaos is a ladder. And so I'm going to close up before we jump into questions. And so my advice to sort of founders right now, you need to be over communicating with your team on what's going on, what your plan is, and you absolutely need to be, which I'm shocked that people are not doing, but even early in the crisis in March and April, you should be spending a lot of time with your customers right now and checking in with them, not selling them, but actually checking in with them and making sure they're okay, because like these are your partners for the future. And so right now, like people are looking for information, people are looking for certainty, and people are looking for some level of comfort. And so don't be aggressively selling them, but you should be checking in with your customers and your team and making sure folks are okay, and over sort of in some cases over communicating with them, right? In a sensitive way, obviously, but just like over communicating with them and making sure that everyone knows that you have a plan and that things will be okay in the long run. And that's what leadership is, right? For you to step up and be out there and run the category. And so that's sort of my piece of advice. I think we're going to jump into questions, but I want to obviously thank all the Chongor, is that okay?
Yes.
Okay. And of course, I want to thank Andres, Zach, Istvan, Julia. Thank you very much for I actually was taking notes. I actually got some great bullets and stuff for later on. But thank you very much, you guys, for joining this panel. And let's jump into the questions from the audience, hopefully.
Yes. Thank you so much, Marvin, and all the panelists. Actually, I will start with one of the remarks and not a question from Andrea. This is the first event to answer on the topic I have attended and actually got smarter. Amazing ideas. Big up for the panelists. So in the name of everybody, I'd also like to thank you. So the first question is actually from me and not really addressed to anybody. I'd like to hear anybody's point on that. And it's regarding fundraising. Do you think that now that it's getting tougher to fundraise, we talked about valuations dropping, do you think that old, not too funder-friendly terms regarding anti-dilution permissions, full ratchet closures, and similar bad, not friendly stuff can come back? And if yes, what should funders look for?
I think it depends on the region. I think in Silicon Valley, I don't know if that stuff will come back because there's so many investors here. And I think people care a lot about their reputations. I worry about like a year, this is my point of view. I worry about sort of more of the sort of emerging markets, sort of like newer ecosystems where I think some investors, and I'm generalizing, but some investors are not from traditional sort of like tech mindset. I worry that some of it is going to come back, and I'm hearing some of that in some of the emerging markets already. Not only like sharking sort of folks on weird terms, sort of liquidation preferences and things. It hasn't. I've only heard a couple instances. So, but I do worry. I think it is going to come back in CEE region.
It's funny you asked this. We just had our partnership meeting prior to this panel, and there was a question from one founder that we were talking to through my partner, and the founder asked, "So you say you're founder friendly? What does it mean in terms of your term sheets?" And my response was, we would never do anything worse than a weighted average for anti-dilution. I personally would never do full ratchet, even if I feel I could strong arm the founder into it, because there's just no point. I would much rather walk away from a deal where I feel that without the full ratchet, I personally would get screwed with my investment. There's just no point in doing it for me. I'm sure there will be investors, but unless you are so desperate that even, dropping this company and getting a job for probably more money than you're making as a founder. If even that investment makes more sense to you, then I guess you will take it. But I would rather not, personally.
Yeah, I strongly believe that unfair terms are not against founders, are against the entire company. So just logically, it doesn't make sense to me.
Thank you. And some of the audience questions, Kirill is addressing question to István. How online billing, recurring billing, and commonly online payment system will change, and when in new conditions of COVID-19? Not sure why the online payment question is addressed to István.
I'm not sure either.
All right, so let's keep this. Sorry, but maybe it was a misunderstanding about the company. The question came in before your intro. So let's go forward. Venu is asking, Venu is building a hotel booking app, hourly stay, for hourly based hotel rooms. And he's asking, how would be the hotel industry in post-corona scene? What changes are going to happen in customer perspective? He's a bit skeptical about the future of his business.
Anybody can answer this one? Yeah. I think he's probably right to be skeptical. I would be very, very concerned, right? Because I think tourism, unfortunately, and business travel is not going to come back for, in my opinion, probably about a year and a half, maybe two, until we get a handle on the coronavirus. So I would be worried. I would be rightfully worried. That's just my perspective.
So we are running out a little bit of time, but I wouldn't like to miss any questions. So please, just a short answer for Lauren's question. What inefficiencies and disintermediation opportunities in some of the sectors you operate or invest in will reveal wide open and that were entranced or hidden before the crisis? So what are the inefficiencies and disintermediation opportunities in the segments that you operate and it was hidden before the crisis? Anybody has a quick answer on that?
I think there was a lot of room for efficiency in the question. I will say this. For instance, one of our major investments, Record, is in e-commerce. What we find is that e-commerce this year, in terms of percentage of total commerce in the US, will be like 7-8 years ahead of the curve. And a lot of companies in the retail sector were completely just caught pens down. Like, I think nobody would have predicted Hertz, sorry, not Hertz, but Heinz, ketchup and everything, going online on Shopify in something that was obviously put together in a hassle. So I think suddenly there is a lot of room for expansion there with a lot of retail businesses desperate to go online. A lot of doors that like this are getting open in the fortunate sectors.
Thank you so much, Julia, and thanks for all the panelists for the great discussions. We really learned a lot, and we are all grateful. So this program block is ending now, and what's going to happen right now? Actually, it's 7:30. So we already opened up the session. So if you go to either to reception, on the top, you will see a call to action to visit session, or on the left bar, you will see the little session icon. And if you go there, you can enter this other screen where you will see Mark Pafalvi and Ben Tegergely from Portfolio, who will be for your host for the pitch night. And the jury members will also join there very quickly. Marvin is one of the jury members, so you will be able to hear him a little more, asking questions and giving feedback to the pitching startups. And as mentioned before, Aurea Pastor, the senior investment partner at Portfolio, is also going to be sharing feedback, and two entrepreneurs, the CEO of Cloud Banzai and the CCO of Sharon, will be part of the feedback panel. And actually, I don't know which 5 startups were selected, so it's going to be a surprise for me too. The pitching session is going to last until around 8:30, 9-ish. In the meantime, and after the pitch event, you can experiment with the networking feature. We're going to leave that open until 10 p.m. so anybody can give a chance. So the networking feature is working in a way that if you click on it, you will be matched together with a random participant. And actually your one-on-one call will last minimum 30 seconds and maximum 5 minutes. You can leave anytime. Or you can click on the change contact details. And if you both of you click on the change contact details, then you will be actually like a Tinder, like, double opt-in, match made in heaven. So you can follow up with each other. I'm not sure if I'm gonna be on stage. So myself, I'd like to thank everybody's participation and join to this session with us. I'm gonna be there in the chat, and we are really looking forward to the pitches. And thanks again for everybody's support, all the speakers, panelists, partners, co-organizers, and attendees. You guys are awesome. We're going to come back with these sort of online events regularly. So you will receive an email follow-up, and we will let you know about our next event. With that note, thank you so much, everybody, and see you at the Portfolio Pitch Night session in a bit. Thank you. Bye-bye.